Warren Alcon here, and today let's get familiar with multiple time frames. When you open up TradingView, here you can see the drop-down menu to reveal all of the available time frames you can use. So we use these time frames to gain insight into price action. On the higher time frames, like the monthly, you can see that there's less information, but there's more integrity to how price action is represented. When you get down into lower time frames, you can see that we are now getting more and more information. But what we see becomes more volatile, sometimes more difficult, and oddly enough, easier to translate. So you should already be familiar with the weekly, daily, and hourly time frames. And by now, your static, support, and resistance areas should be plotted. If not, let's get things dialed in really quick to confirm these areas. All right, so if you're having trouble setting your support and resistance, or if you're doing too many or not enough, this will help you out. Take your chart on the weekly and drag it so you only see about 12 months or a year's worth of candles. You can shrink that down over here. Set your swing high and swing low, and any area that's acted as both support and resistance. If you're at a swing high or low, then take it back until you see the most recent swing high or swing low. For Bitcoin, it's up here. All right? So I need you to start seeing the importance of time frame navigation. It's essential to our entire trading strategy. As we plot support, resistance, chart patterns, and so on, we're going to build a checklist to define what is called confluence. Confluence is when we have multiple signals pointing to a similar area, and this concept is what drives our discipline as traders. So moving on, let's start our assessment with the weekly time frame. As mentioned before, higher time frames give a very strong representation of market movement, but are not always the best time frame to trade with at the retail level. As you can see here on, let's go to the Polkadot monthly time frame, all we can see is that basically since April, we've been in a downtrend. And just recently, a month ago, last month, there was a slight turn to the upside. One green candle. It's not really enough information for us to go by. And you never just want to blindly buy when price is on the rise. That's the worst idea ever, period. So even when we get down to the weekly, we now just see two candles. Still really not enough, nothing to go by. So let's get down to the daily time frame where we can see a little bit more information. Let's expand our section here and just get it recentered. You can press this button to recenter and then we can drag it. Okay. So on the daily time frame, we're now seeing more candles reacting to this area. Price bounced off of our support, and there's candle colors going back and forth right here in this area, but still not enough information for us to go off of. Now, what we're going to do is look inside of this area right here. So over to the hourly, we can clearly see that the uptrend has completely exhausted in this area. We can also draw a short-term area of support and resistance here and here. And for the hourly, let's change up our support and resistance areas just so they make it a little nicer to see. So let's change them to yellow, 2 pixels, and a dashed line, just so it really kind of sticks out and we can kind of get in the habit of knowing what our short-term support and resistance looks like. So it's clear now that the price is ranging sideways, or chop, or consolidation, whatever you want to call it. Also from this point, we can take this measuring tool that we have right here and see how much price has moved within a plotted period of time. So you select it, click it to select a starting point, and then you can drag up for uptrend, down for downtrend, but you're going to drag it over towards a general area, click to set it in place. That's your endpoint. So we can see that price has moved about 20% and then bounced off this area of resistance, and now arranging pullbacks between these two areas. We can now see this resistance as an area that is overbought in a supply zone and also in a distribution phase. So because of this, we could be in a possible short position entry pretty soon because we're going down to the downside. You can see it's just still following here within the past hour. The candle turned green. We're just still seeing how it's going to react to this new area. So what that whole process did was to help us clarify what price action was doing on the weekly, monthly, daily, and hourly. So on the weekly, all we could see were the two green candles. And that's just clearly not enough information to make any assessments. So we moved on to the daily, and we saw that prices reacting and changing colors right around here after it bounced off this area of support. But it's still not enough to give us any trigger events for a position entry. But on the hourly, price action becomes much more clear. See, price rejected this area of support or demand or oversold an accumulation area. Price turned to the upside and entered this resistance area here that we defined earlier as overbought, and then supply zone and distribution area. So based off the information we now have, we should be setting up for that possible short entry on the downside. So based off the information we now have, we should be setting up for a possible short entry. So see how we're starting to build assessments based off of basic price action without any indicators, and we haven't even started with chart patterns or candlesticks yet. And there was a quick introduction to navigating timeframes. So don't worry if it's not crystal clear just yet. There's going to be plenty of lessons in navigating timeframes coming up. So let's jump into your homework. So verify support and resistance areas in the 3 main timeframes for each of your top 10. Take notes in TradingView if you see price action nearing these areas. And I've added a couple news links in the section below, so look for news that could possibly affect price action. The whole goal is to become an advanced thinker, to be very comfortable navigating price action through multiple time frames, all the way down to the 1 minute if necessary. So let's start building your checklist of what we aim for when finding confluence. So the first one we're going to be looking at is support and resistance areas. Next is going to be multiple time frame check. Remember to always focus on possible long and short entry opportunities. This is your first practice week to see how you can perform with multi-time frame confluence. And actually another thing, I'd also like to ask you to throw in some comments below if you have any questions. If you feel I didn't explain things clearly, or if you think I left something out. And please hit the subscribe, like, and even share buttons to help support the channel. That's it for today. See you next time in Chart Patterns.